Yeah, 1 minute-ish. Yeah, we'll get started in just a moment here. Sorry, setting something up. All right. Good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome to the Coach's Corner. This is Brandon Wendell with you today. Sorry about the little late getting started there, but I wanted to get everything else set up for us. And we're good to go now. So let's see here. Oops. That is not what I wanted to do. What is that going on there? Hang on just a second. Oh, well, I'll deal with that later. Anyway, so yeah, happy Friday. Hope everything's going well with you today for the markets. And we'll just jump right into this. I just need to put out a little disclaimer here that neither free management partners of its personnel, dealers, or broker dealers, and investment advisors. We talk about several different securities, and because I'm looking at securities doesn't mean that I'm actually telling you to buy, sell, or hold those securities. And I think my camera went dead for a moment. That's okay. I'll get it restarted in a moment anyway. It's weird. But anyway, I'm not giving any recommendations. This is just for educational purposes only. I apologize for the little tech issues here, but no big deal. Hopefully you can still hear me and see my screen. That's the main thing anyway. And perfect. Okay. Let's see if I get that going again. So there's no trading restrictions on us either. Like I said, I'm not a broker dealer or investment advisor, so I'm just giving educational information out there. And that's about it. So I can have position at security, initiate a position security anytime. Also, if you want to stay in touch with us, there's a lot of things you can do. We have premium online workshops at Wealth Builders HQ. You got Trading You twice a month, Monster Market Movers, the Inner Circle, quite a few things going on there. And for the free online workshops, obviously you have these coaches corners every Friday, which is great. It's myself, Tony, and Ryan. We're rotating around and having a good share of information here. And let's see, okay, looks like the video's back up. Cool. You can see I'm wearing my bow tie again. I decided to get dressed up for you guys. And I am wearing pants too. So everybody always says, because with everybody using Zoom nowadays, you wonder if they're actually dressing up. I wore jeans, but I saw the bow tie for you. Anyway, continuing on, if you want to follow me as well as Wealth Builders HQ, you've got the Wealth Builders HQ website. You've got me on Facebook. I'm also on Twitter, on Instagram, LinkedIn, and I also have my own YouTube channel as well as the YouTube channel for Wealth Builders HQ. So you can follow a lot of these videos there. And, the recording of this video will be available on the YouTube channel as well. Not my personal one, but on the Wealth Builders HQ. So let's jump right into it. We're here for a reason, and that's to get some information about Fibonacci's and how we can use those, especially because we've been reaching to all-time highs. You might have noticed in some of my marketing I put out, I've actually been to the, there's like a mausoleum right near the Pisa, in Pisa, right near the Leaning Tower. And the mausoleum, there's a statue of Leonardo Pisano Bonnacchio, known as Fibonacci. So there's a picture of the statue. And my marketing actually put out pictures of me standing at the statue. It's so funny because everybody always goes to Pisa and they want to take that, the picture with holding up the tower, the leaning tower. I was so excited to get over to this guy, and the tour guide was amazed that I actually knew about Fibonacci statue being there. Nobody else in the tour knew about it. It was funny. Anyway, getting back in time, I think it was in the 1100s, 12th century. It's either 12th or 13th century. I don't remember exactly, but Fibonacci, Leonardo Pinocchio, was actually a mathematician, and he found that if you took a number, you added the number in the preceding sequence. So 0 plus 1 equals 1, 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5, and then 5 plus 3 equals 8, and so on and so on. You start to see some properties of these numbers, as well as the ratios by dividing some of those numbers. And it was applicable both in nature and in man-made creations. So we see these numbers over and over and over again. And basically the ratio of any number greater than 3, so it'd be 5 divided by 3, 8 divided by 5, 13 divided by 8, and so on, they alternate the ratio between 0.618 and 1.618. 1.618 is known as the golden ratio, or phi. Okay, you might have heard of pi. Pi is 3.14 and then the ongoing number. Phi is 1.618, and it too is an ongoing infinite number as well. But that's called the golden ratio. So it's important because a lot of things in nature just appear in these Fibonacci ratios. It's kind of interesting. And man-made, we did this as well. If you take a credit card, for instance, let's see, if you grab a credit card, showing you the back, not the front. That doesn't matter. Anyway, this one doesn't work anymore. That's why I can show that one. But the cards themselves are measuring 89 millimeters by 55 millimeters. Okay, so that is a Fibonacci ratio. Both of those numbers are Fibonacci. So we look at art, and horizons in art tend to look best when they're in Fibonacci ratios. So pineapples, the squares on the outside of pineapples, sunflowers, they all grow with Fibonacci ratios. It's kind of interesting. So we can use it in the financial markets as well. And some of the other important ratios besides the 0.618 and the 1.618 are 23.6 or 0.236, 0.382, half, basically 0.5, and 0.786, although many platforms use 0.764, that is the inverse of the 236. If you subtract, 0.236 from 100 to get, or from 1, you would get 0.764. So those are the most common ratios that we tend to use when it comes to financial markets. And this, by the way, all this works on Forex, it works on futures, and it works on equities. So you can apply this to any security across the board with equal accuracy. It's not the number one best thing to use. Obviously, price action is always best, but this can be used as a decision support tool to help you when deciding whether or not you should be buying or selling a particular security and where to buy or sell. We also have what are called extensions or projections. It comes down to whichever platform you're using, what term they refer to this as. But with the extensions, you got 0.618, 1, 1.272, and 1.618. And there's a couple others I'll be adding as well. So basically, we have to understand how the markets are operating. In any market, again, this could be futures, Forex, stocks, it doesn't matter. It all works the same way. You have impulses and you have corrections. And I'm not going to get into Elliott wave, but really the Fibonacci tools are used quite heavily in Elliott wave analysis as well. But the green in this case are impulses up and impulses down. The red are the corrections. And when you're looking at impulses, impulses are moves, smaller moves in the dominant trend direction. I'm going to be focusing primarily on Fibonacci's and how to use them properly. I actually did, I think, a section on trends. I don't know if that was the last Coach's Corner I did. I know I did. No, I did Follow the Leader, but I did a section on trends as well. But they're kind of hand in hand in a way. But really, I'm focusing primarily on the Fibonacci's and the use of the Fibonacci's as a tool. Okay. By the way, if you have any questions, feel free to ask, and I'll answer the questions as well. Yeah. So yeah, this will be very similar to what we did in the E-mini Think Tank class. For those of you who aren't familiar, I actually teach a course or run a class. It's 3 days a week live called E-mini Think Tank, and you're more than welcome to join me in that. I'll get you a link in a little bit. But in the E-mini Think Tank, we look at the markets live 3 days a week on Mondays, Wednesdays, and Thursdays for 2 hours a day. And I apply a lot of these techniques in that market. So Will is saying that some great stuff in there and you follow all the classes. Thank you very much for being there. Yeah, I've seen you there. So anyway, moving in the impulses, we've got the strong dominant moves. Usually you'll see larger candles and maybe even gaps in that direction. The corrections are the slower pullbacks moving against the overall trend. Thank you, Amelia. There's the link if you're interested in learning more about the E-mini think tank. So the corrections are slower. They usually consume more time as well. It takes more time for those markets to move in a corrective mode. And you'll see smaller candles. Oh no, this is going to be direct application. Exactly. Yeah. That's what we're going to do. So overall, this is a correction back after a big impulse up, but there's also corrections within the corrections as well. So you just got to understand where you are in the big picture as well as the small picture to be able to apply this properly. So these are all measurable though. Impulses can be measured by a tool called extensions, Fibonacci extensions, and the corrections can be measured by the retracement tool. So we're going to be seeing how we use these properly. There's a lot of different ways of using them, but we want to find the one that's most accurate, obviously. And if you want to get even more in depth into Fibonacci, you can start using things called arcs, or you can use Fibonacci, what's it called, the angles, and they also have time as well. So you can look for intersections and correlations with that as well. But, you know, we want to keep it as simple as possible. Trading can be quite complicated if we allow it to be. And it doesn't need to be. That's the thing. We're simply trying to make money based on what the big institutions are doing and piggybacking off of their decisions. Fib fans, that's what it was. I couldn't think of it. Thank you, Robert. Robert said they're Fibonacci fans. And yes, they are. Yeah, I could not remember the name of that for the life of me. Anyway, when we're looking at corrections, we're going to start off there because that's the first thing that many people look at is we've had a move in the market for an impulse and now we are correcting back. We're moving against the overall trend. Our goal as traders typically is to jump on board the impulse at the beginning of the new impulse. So to know where that new impulse is likely to begin, we have to know where the correction is going to end. So we can set up our order to jump in as it turns back into the trend direction. That's it. We're just trying to figure out the end of the correction, re-engage the trend. So we're going to measure the preceding impulse at the beginning of the move. Now, there's a little bit of an argument that comes here sometimes because many people will use absolute lows and absolute highs, and I found that not to be the most accurate method. Don't get me wrong. I'm not saying it's wrong. I'm saying it's not the most accurate method. What I have found is if you use the open of the candle that began the impulse, you do much better. Meaning, light's a little bright in my face there, meaning I use the open of the candles, not necessarily the absolute lows or highs. When you look at the levels that are, or lines or numbers that are created, ones that line up with prior zones work best because you got some correlation there. You've got two different studies, the actual price action study and the Fibonacci numbers, which are just mathematical calculations that help to identify where turning points are going to be. Well, if you've got multiple tools all pointing the same spot, that's likely to work much better, obviously. So when we're looking at impulses, we're measuring point A to point B. Our correction is point C. Our job as traders or investors, this could be longer term, is to determine where that point C is because that's where we want to buy and re-engage into the ongoing bullish trend. So that's what we're trying to do is jump in at point C. And the way we do that is we measure point A to point B, multiply that by the Fibonacci ratios, and then we project these lines downward to let us know where the end of C is going to be at one of those points. And if we're in a downward trend, it works just the opposite, but the same. We're measuring point A to point B. That's our downward impulse measured by the Fibonacci ratios. Add that to point B, and it tells us where we should retrace to before continuing our march downwards. So a couple of things we should be looking at, though, when it comes to these Fibonacci's kind of myths versus realities. As I mentioned, it's not always to be drawn from the extremes. That's what a lot of people do. When I have a bullish trend, I want to look at the most complete and the origin of that strongest trend up. Yes, this is going to be recorded and it should be posted on YouTube as well. Yeah, absolutely. Okay. And the previous slide, this slide, you were asking? Yeah, this should be available on our Wealth Builders HQ YouTube channel. So yeah, all we're doing is using that A to B, measuring that, and multiplying by the fib ratio and projecting it from point B to let us know where the correction is going to occur. And as I said, the best thing to do is ignore some of the spikes, look for the origin of the move. So I'm going to go out to a chart right now, because that's one of the best ways to do this. I happen to have the S&P 500 E-minis up, and we'll go back in time just a little bit here. Notice we started to have a correction down on the right-hand side of my screen there. Let me fix that. Get that out of the way. There we go. Anyway, we had a move up. And what a lot of people will do with the Fibonacci's is, again, they'll start from the extreme and go to the extreme. That is not the most accurate method. What I have found is that starting from the beginning of the impulse, which to me began right there, is going to give you much more accurate Fibonacci retracement numbers. So let's compare. We see when we came back to roughly 78.6 and turned in the area. Now, did we hit this one better? Maybe. In this case, using the extremes might have worked better, because you can see we had a close at the 61.8% and then started to move up from that area. I don't know if you can hear it. My dog is snoring loudly in the background here. Anyway, but no, in practice, what I found is that I've got two French bulldogs. Those who are in my class know them, Pascal and Lucy, but they're characters, and Pascal is just snoring away loud in the background. Hey, Pascal, what are you doing? Anyway, so like I said, sometimes it's best to use the extremes. I found in practice, though, you go from the open of the candle that begins the impulse. And honestly, this may not be an uninterrupted move. What we had here was a move up and a correction back down already. So if we were to use that measurement, it's going to look a little bit different. When I lost my head when I turned. You got to love the green screen. There we go. I can just do this. I'm the headless. That's crazy. Anyway, all right. Yeah, exactly. It works every time except for it doesn't, or when it doesn't. But you can see that this was actually an impulse up, and it may have been interrupted as well. So really, when we're looking for retracement values, we want to find an uninterrupted impulse. For instance, here's one. We started moving up again, and this is where it becomes a little subjective, because again, a lot of people will start from the beginning of the move all the way to the top of the move, but that's not correct. The better way to do this typically is from the open of the candle that gave you that uninterrupted move, that impulse up. And it'll take a little bit of practice to get used to that. As we pulled back, you can see that was dead on for the 23.6. We couldn't get a close anything lower than 23.6 and started to impulse back up. Had we gone from the extreme low, that actually worked as well. We were okay there. Okay. And this happens to be on an hourly chart, but yes, we can do this with any time frame. So let's go out to, say, AUD, NZD. We go to currency pairs, and I'll go out to a daily chart and remove the drawings for now. But yes, we can do this on any security and any time frame. So we've had a couple of impulses and corrections here. You notice the corrections are starting. We're making fresh lows. Prices started from that move on this green candle and rallied all the way up to that high. So I start from the open of the impulse candle, the beginning of that move up. So whatever candle was our open there. And we retraced kind of in the middle. We didn't actually stop right at the 61.8. So again, you can compare to see, would it have been better using the lows? It was a little closer, but still didn't hit. So it's not perfect. Now, what I can also see is this may not have been an uninterrupted move or the end of the beginning of the move. We had a little interruption here. And by looking at that impulse without the correction, we actually did come down to the 100%. We go forward, we had another impulse up. I just kind of back tested, and actually, believe it or not, I read a book about Fibonacci. So if you want to, and you want to learn more about that, obviously I've got this video and I've got some help online as well, but I'm always willing to share this. If you're to go out to, let's do Google. Hans Fisher, new Fibonacci trader. So there's this book that I read ages ago, and you gotta be careful. There's a workbook that goes with it too. It's Robert and Hans Fisher. It's a father-son combo that wrote that book. It's called The New Fibonacci Trader. And that's where I read about this. And when I was studying for my chartered market technician designation, I ended up reading this. Actually, no, it wasn't part of that. It was just after. And started experimenting with it. And I found that that technique tends to work better by using the opens and closes. Okay. So anyway, you can see there was another correction going on. We had an impulse up, correction down. And there's two possible measurements here. Really, we had a move all the way from this low to this high. But we also could say, wait a minute, well, we had really kind of corrected sideways through here and really impulsed up from here. And as we came back down, looks like the big one worked. You can see we hit a 50% retracement right there and started to go sideways. And that's where we're trying to bounce from right now. So the overall move worked. Again, not using the wick, but using the body of the candle, the open of the candle. That gives me a little more accuracy. And if you want to go to stocks, we can do the same thing. Let's see, tell rate. I haven't looked at that in a while. Yeah, there's probably not much on that one. That's a pretty deep correction, but you can go from the beginning of the impulse all the way up to the highs, and we retraced right there, 78.6%. As you can see, started bouncing in the 78.6% level area based on the beginning of the impulse. Or you can do things like, let's see, do I have Bitcoin on here? Bitcoin futures, there we go. This is a continuous Bitcoin chart. And once again, you go from the beginning of the impulse, open of that candle, and look at that, 50% retracement back at 44,000. Started moving up from that area. Another impulse, another measurement. So as I mentioned, I wanted to kind of show this can be used on pretty much any security. Here we had the correction back down to a 61.8%, and it started to impulse up, stalled, and went to 78.6 because we'd already taken out the other levels. And now we are impulsing back up. If we are correcting currently, this happens to be on the daily chart, but again, I can put it on different time frames. I would use the open of the April 8th candle to the highs, and you can see we retraced nearly 61.8%. The probability now is, as we're in between two zones, that we will close close to 38.2% because we're closer to that currently. So I can give you an idea of where we might end before the end of the trading day on those Bitcoin futures. Or we can use it on common stocks, Apple, and let's go to a smaller time frame. Oops, maybe 4 hours. I don't have a retracement yet. Gotta have an impulse and a retracement. And this, by the way, I've been using the upward moves, but you can see right here, we had an impulse down. And what I need to do is identify, where did the impulse really begin? It was right there. And I'm going to ignore that extreme. I'm going to go to this low. It'll give me more accurate data by using that. So if you notice, I didn't mess around with where we're going back and forth and back and forth. This is where we really started the downward impulse. I ignored these wicks, these extremes, and we turned in the area 50%. So had I not done that, and I used the extremes, kind of missed the 61.8, it was close, or if I went wick to wick, it was still pretty close, so you could be okay. But for accuracy purposes, it has been best in my practice to use the beginning of the candle that starts the downward move or the upward move if we're in an upward impulse, and end at the end of the trend before the correction, but ignore extreme wicks like this, weird price movements. And it tends to work pretty well, except for when it doesn't, right? Again, there's nothing that's perfect 100% of the time when it comes to technical analysis. So as I said, we can use EUR, JPY, go into the currencies. And same thing, I can look at any time frame. Let's see, we had a bit of an impulse up right there. And we started from this green candle, impulsed upwards. Really, we had a couple different corrections here. You can see impulse, there's your correction. And we started a new impulse at 50% retracement. It's pretty close. We had another impulse. Correction down to 78.6 before impulsing to a new high. Impulse up, starting to correct back down. Again, not the low, but the open of the candle that started the move should give you more accurate readings. In this case, we went more than 100%. And notice when we did that, we had some other Fibonacci numbers here. And look at where we stopped. 161.8% of the previous impulse fee. So comparing the two, yes, I can compare the two like this. Let's do, just to give you an idea, if we overlap them, we can use one color for all that. And then I do it again from the low to the high. Oops, that's not what I wanted. Come on. That's what I need to do. Use a contrasting color here. And you can see that using the blue, even though this was further than 100%, that actually hit the 161.8. If we use the red, it didn't do anything. That was going from a low to an absolute high. So let's compare this on a preceding impulse that we've already measured out. Same thing, right? Oops. There we go. Move that back. This is the open. Actually, that doesn't mean much of it. There's not much of a difference there. This one is. We have the open to the high, and you can see we pegged that 50% almost on the dot. So instead, we can measure to see how much of a difference this would have made if we went from the low to the high. And you can see that we are in between with the reds. We hit the blue, which was again using the open versus the to the high versus the red, which was using the low to the high. So it's more accurate on average. Yeah. So you see that's the difference that you're asking about, that work? Is everybody okay so far with this retracement values? You know, we can use this on larger time frames. If we go out to, let's say I want to go out to the S&P 500 futures on a large time frame here, daily or weekly. Right, I'm going to clear out my chart here because I got some drawings done on this. Yeah, you just have to practice and get comfortable with it. Absolutely. But you can see even the some of these big moves, we had 2018 and the nice little retracement pullbacks. Instead of using the wick, you go to the body. I'm going to go back to default on this. Apply defaults, but that's not going to be quite right. And I want to extend. There we go. So what happened was on this impulse up, you got that retracement down 38%. There it is, right in the area. We get another impulse up. Oh, but before I do that, comparing if we use wick to wick, it missed the lines, but it was close if you use the body. It is a lot different than a lot of people do teach, honestly, but I believe this is much more accurate. So that's why I use it. And again, we have another impulse up, correction down. Unfortunately, the Fibs kind of failed us here. Didn't really work too well. And we had to close initially at 38.2, but then we closed in the neighborhood of 50, closed in the neighborhood of 61.8, and then shot back up, but we never actually hit the 78. But yeah, it's just practice and seeing which works best for you. I'm not saying other techniques are wrong. I'm saying this is the technique that works best for me. So no, it doesn't matter what time frame you use this on. It depends on what you are doing for your trading. If you're day trading, use smaller time frames. If you're looking at long-term analysis, use bigger time frames. So overall, again, big impulse up started right there in 2019, October. And look at what happened with the retracement. The COVID 2020 crash went exactly 261.8% of our preceding impulse if you use my method. So we can tell you where those corrections are likely to begin to end and new impulses begin. And in this case, we went more than our preceding impulse. So it was actually an impulse to the downside, but this still was accurate enough to give us an idea as to where the bottom might be lying just under 2,200. It's pretty incredible, isn't it? Well, that's how we can measure corrections. Again, corrections are the pullbacks after the sharp moves in trend. So here we have another impulse up. Actually, that's not the right one. Should be right about there. You can see we impulsed up, 4 green, pulled back 23.6% and started a new impulse. Start pulling back a little bit there with the new low. And you can measure from the beginning of the preceding move. Once again, I'm using the open of the candle that gave us our impulse, beginning of the impulse. There's not a best time frame to start with. I'm getting asked, what's the best time frame to use to start with this? It's really any. It's whatever you feel comfortable trading on, really. Charts and price are fractal, and fractal means the pieces are the same shape as the whole. So whatever you apply to one time frame should equally apply to other time frames. That being said, typically the higher time frame zones will tend to work better because more people will be looking at them. And with more eyes on something like a daily or weekly chart, there's gonna be more action being taken on those. What does daily SPY around 3/4/21 look like? I can take a look. So let's go into SPY, daily chart, and we clean this up. I'm using TradingView, by the way, in case you're wondering what platform this happens to be. And it's a nice tool. I mean, if you've got a charting package that works well for you, just use it. Don't spend the money on something else. But if you are interested, I can give you a promo code. There you go. I'll get you $30 off. Yeah, it's the Pro. I'm using the Pro Plus. There's different versions. But like I said, don't spend the money if you don't need it. But if you're interested and you want to join in on TradingView and use the tools, try it out. And there's a $30 coupon for you right there. So full disclosure, I get $30 for anybody who enrolls too, but that's not why I'm showing that. I just want to see if you're interested in doing this, do it. If you're not, don't. Again, don't spend the money if your charting package is great. TradeStation, Thinkorswim, Interactive Brokers, they all have great trading. They have great tools for their trading. And if that gives you everything you need on your trading platform, stick with it. Don't complicate things. So anyway, the question was March 4th, 21, right here. So that rally. So looking at the spiders on the rally, that would be the measurement there. Actually, go with that's where we started correcting a little bit, but I guess we should use this as with a high. So once again, I'm using the open of the candle that began the impulse up. And you can see we hit 78.6%. It's a pretty deep retracement and it rallied up from there. Now, what if you had used the absolute low? It's kind of in the middle of a 50%. It didn't actually stop there. It stopped way below, didn't it? And even if you use this candle, it still wasn't as good. So here, we're much closer to one of the points. And you can see we never closed below 61.8%. Closed near it. So it worked. I would say it worked. And if there's any other questions on the retracements, please, again, let me know. A couple things to keep in mind. Bull trend started at the origin, the strongest move up or impulse leg up. And the bear trend started at the origin, the largest or strongest move down. When it says adjust for channels, what you have to be careful of, obviously stocks sometimes go sideways and channel. And when they do, let's see, it's not the best example, but it is somewhat of a channel here. Right there. Okay. Yeah. So what happens is you can enter the retracement for the new impulse. Absolutely. Marlon. Yes. Okay. So what happens now is we've got an impulse to the downside. And this is not a really good example. I got to find something a little bit better. I'm trying to think. Individual stocks. Well, there was one. eBay as well. Same area. Kind of channeling here. Really got tighter. This was more the channeling right there. So you see we were sideways and channeling, right? So instead of measuring the impulse like this, where you have the beginning of the move down to the low, you actually want to measure from the breakout point of the channel. So you measure from the breakout point of the channel itself, and that's supposed to be more accurate. And we did stall right there, 50%. Look at that. We're at the 50% move. If we had done this from the beginning, kind of in no man's land, we're right, going above. But by using the breakout point on the channel, that gives you a much more accurate measurement as to where you might get some turns. And we did. We turned and pulled back from that area. Ultimately, went beyond 100% because we ended up trend reversing there. Now, with the gaps on the retracements, I ignore gaps. Robert is asking, what about a gap up or a gap down? Do I count the space in the gap in drawing? I do not on retracements. Extensions, yes, we do. We have to add in the gap space. It makes it more accurate. Joshua was asking a question, when fib level hits and makes a new high, when do you move the anchor as opposed to extending the pull to the new high? So for instance, here, you're talking about this where we pull back and then start making a new high. You would actually have to redraw, not move to the new high. So what I'm looking for to know when I should start drawing new retracements, that's a good question. So right there's the beginning of our move. This a little bit should be at the open of that candle. That's the beginning of our move up, right? Now, how would I know I could start using these Fibonacci's? Why did I start using it right here? Why didn't I start using it here? Well, because in order for me to be putting in a correction, if I'm in an uptrend, I need to have a new low and lower highs on the candles. So notice, higher low. Come on. All these are making just higher lows, right? This won't move. Okay, this is not going to work out as well as I wanted it to. Anyway, all these are higher lows, aren't they? So when do I start using this retracement tool? Well, I might be able to start using it here because now we made a lower low, lower high and lower low. But I guess I could. I can just start using it there. Low to high, because we started making a lower low, and it didn't really help at all. We didn't hit any particular numbers. So I might be off. And we can see that overall, we're still making higher highs and higher lows. We made a lower low here, but not a lower high. And again, it's all about making the lower low after a lower high, and there we didn't. So we keep going up. Now we're seeing some indecision. There we go. Now I can pull from this low to that high. Reason why? We just made lower low after a lower high. And then we pull back to the 50%. How do I know when I'm done? We should exceed the prior highs. We're in the new impulse now. So I just keep going and there we go again. We've got another lower high and lower low. So I look back to see where is the origin of that move up. It was right here. Draw the line up. We hit 38.2% and maybe our only retracement. Nope, we went further to 50. And now we've made a new high. So I know we're done with the retracement. That was it. So yeah, I could trade off the fib until the trend changes. Well, once we get a new high, I don't use that particular fib anymore because we've already completed the retracement. We're now on the new impulse. So if I was looking to enter, I already missed it. So in this case here, we pull back and we see we're coming into this area of the 50% retracement. If this correlates with the prior demand zone, I could possibly go long there. If not, this is where you got to be careful because you don't want to jump in too many times and get shaken out, right? When I first draw this right here, we have a new low, lower high, lower low. So how do we trade using the Fibonacci retracement? Well, it should be correlated with some other tools. Okay, I should be looking for price action, some demand zones or resistance, supply, support, things like that. So if you were to try to buy here, the way you would use Fibonacci's is you would buy at one Fibonacci number and place your stop below the next Fibonacci level. So if you had bought at the 38.2, your stop would be just underneath the 50%. Okay, So I could do that as a set and forget if you want to. Yeah, I don't have to do confirmation. It just depends on how comfortable you are with the zones. And what I would also look for to see is on the smaller time frame, because right here we're dealing with the trend in the beginning of a new trend. My entries are typically on lower time frames. So what I would be doing is going down to from a daily, perhaps to a 4-hour chart and finding a buy zone that correlates with this. And then placing my entry at the fib level with my stop below the next fib level. Well, as you can see, that one didn't work. We went down lower. So if we're taking another stab at this now, because of where we are, I'd be buying at the 50% with a stop below the 61.8%. But again, I would be going down to the 4-hour chart. And on the 4-hour chart, as we're coming down to that area, I'd be looking for zones to correlate. And if I don't have a zone correlating with this, yeah, this is done on the trend time frame typically. The Fibonacci should be applied on the trend time frame. That's what we're trying to measure, impulses and corrections on the trend. Make sense? So that way, if we go into the smaller time frame to time our entries, now we know where to get in and out if they correlate with the Fibonacci level. And you're kind of tying everything together a little bit better. Like I said, I do this in much more detail in the E-mini think tank. So if you want to learn more about this, I have another video and a bunch of documentation that supports it inside the E-mini think tank. And you're more than welcome to join us there. You get a 2-week free trial if you subscribe as a quarterly subscription. If you do the monthly, you just do a month by month for a subscription there. And I don't know if Amelia's here. If she can put the link back up, that'd be great. And not have to pull it up again. Not sure if she's here with me right now or not. But let's see. Oh, there we go. Got it. Thanks. Okay. So that is the retracements and a little bit on how to trade the retracements. Let's continue on and go into extensions. Okay. So I was saying before, if you can get your bases in line with your support and resistance, supply and demand, it worked out well. If you've seen that the levels worked out well, that'd be great too. Also for morning reversals, if you're a stock trader, often you'll see there are morning reversals. Use the overnight trading to give you the fib levels to let you know where the reversals are likely to occur. So I'm looking at a stock like eBay, or I can even look at, who's that, MN or NQMON? I don't know what that is. I'm not sure what you wanted there, Marlon. Anyway, if you look at the NASDAQ, oh, monthly, I get it, NASDAQ monthly. The NASDAQ, yeah, same thing. If you're looking at, well, this is not pre-market, but if we were to go to QQQ, which would be the pre-market activity you could look for. Actually, I'm not sure how to turn on the pre-market on this one. I forgot to do it on this. But what you would do is pre-market, you would use, because there's going to be gaps that you got to be careful of because there's pre-market activity that's going on. Instead of using what you see here on the chart, you would actually use the pre-market information, the extended hours trading, and that'll give you an idea where the first reversal might occur in the morning. All right. So we're going to continue looking at these equity futures and things like that from the expansion. I want to get to the expansions now, or extensions. As you can see, I use them. Right. So going into the extensions, there I do use the extremes. Let's say do use price extreme spikes. So it's only on the retracements I use the open of the candle for the beginning of the impulse. When it comes to the extensions or projections, I use the wick to wick. Always use the extremes, use the spikes. You want the entire move for the projection. And basically what we're going to be doing is also adding any gaps in. So if there's a gap in price that occurs, you've got to add in whatever the height of that unfilled portion of the gap is to your extension. If you don't do that, you're going to be missing out on some of the price action. It might not work as well. And basically you need a complete impulse and a correction that's completed. You're starting on the new impulse and trying to figure out, okay, where are we going to go? And this is great when you are having all-time highs, because if you have a security that's an all-time high, there's nothing overhead to let you know where to stop. Where's the end? Where do I take my profits? So we can use these Fibonacci extensions or projections to let us know where it's going to be. So if we want to project a decline in price, we need to have 2 highs and 1 low. So you got to have an impulse down, making a high and a low. And then the second lower high is your correction before it drops. If you're projecting an advance in the market, you're going from low to high, correcting back down to a higher low. So that's why it says two lows and a high. You need to figure out where the next impulse is going to be. So we're going to measure the preceding impulse, okay, using the extremes, and end at the start of the correction. So right here, we have point A to point B, which is my impulse. So point A to point B is my impulse. The correction has happened, point C. We're trying to figure out where point D is going to be. And if we're trading, we should have been in on point C based on a retracement and a demand zone. So we're going to measure the impulse, which is point A to point B. We're going to take that height, multiply it by a fib ratio, and then project it from point C. And the most common projections are 61.8, that the height, it's basically 61.8% of the height of the preceding impulse, duplication of the preceding impulse, or 1.618% of the preceding impulse. Those are the three most common. There's others I'll show you. And for a downtrend, it's just the same thing. You got an impulse down, correction up, and from that upward correction, wherever that ends at a retracement value, hopefully, we are going to project downward or extend downward to let us know where the new impulse is likely to end. It's relatively simple, but it's pretty effective. Once more, this works on any time frame, although it has more power on the higher time frames. It also works on any security. However, Fibonacci's are much more heavily used in the Forex market. So I found that with Forex, it tends to work a little bit better than it does in other securities. But it does work pretty much everywhere across the board. So going into our live chart, I happen to be on the NASDAQ. And we've been running and running and running to all-time highs, right? So what if we were day trading this thing? Let's go to, 15 minutes is what I wanted. There we go. And I'm going to erase everything, start fresh. Okay. And you can see that we've been in our nice big bullish run. Actually, let's go out to the daily for a moment and get our start point here, because we can use this on the daily as well. But we really started rallying here since March 31st, haven't we? So when I go into my 15-minute time frame, let's go back to beginning of April, right? And let's kind of walk through how we could use this Fibonacci as a tool to identify where corrections or entries and exits would be. Basically, is what it comes down to. How do we make money using this? That's what we're here for. So currently, it appears that we are sideways in trend, kind of choppy, making similar highs, relatively similar lows, right? I could verify that by looking at my 60-minute chart. Remember, Fibonacci tools are typically applied to whatever time frame you are trading or watching the trend on. That's not what I wanted to do. So again, I'll go back here. And there's the beginning of the move. As I mentioned, we're sideways in trend. Now we're impulsing up, as we can see. I say we're impulsing up because we're making higher highs and higher lows. We got lots of green candles and we're moving up. Remember, I can start applying these Fibonacci's when we start getting a correction. How do I know we're getting a correction? Right there. We are making lower high and lower low for the first time in this sequence. That's it. We made a lower high before, but not a lower low. Now we made lower high and lower low on this candle. So we're going to see this is point A. Here's point B. And we need to know where C is going to be. So we use retracements. I use my retracement tool, go from the beginning of the move to the top of the move, and that's my impulse. Prices start to pull back. And it looks as though we may be done at 23.6%. So if this correlated, first of all, I would look to see if this 23.6% level correlated with a buy zone on the smaller time frame. Put that down there, 87. There it is. And let me go ahead and put this in just to mark it. 15-minute. It's going to go back. Here we are. And this is what it looked like on the 15-minute chart as we were pulling back. Well, we didn't really have a good buy zone here. I mean, it's rally, base, 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 and then rally up, but it's kind of a weak zone. So I don't know if I would have bought that. Here we have a little bit better rally, base, rally. There we go. So again, I'm just kind of walking through the thought process, what it would be if we were using this as a trading tool and we had 38.2% correction identified. And here's the nice thing about that. If this is our zone that we were looking to buy, is from 1370 to 13101, that's a 31 point zone. It's pretty wide. So instead of trying to figure out where to buy in the middle of that zone, which actually already has been tested a little bit, now we can buy in the Fibonacci level that's in the middle of the zone. That's where this can become much more powerful. This Fibonacci level, the retracement that we're measuring from that high, is telling us where we're likely to start a new impulse up and where we should be buying. By going to the smaller time frame, that zone time frame, I can see we should probably go below this low because we wiped out all the buying pressure that was above that. So the unfilled orders are going to be sitting down here. And the best point for me to enter is where we correlate with a retracement value inside of my demand zone. Does it make sense? So we look to buy as we come down to that level. And there's our entry. It actually hit a little bit lower, didn't it? It went to the bottom of the zone, but never broke the zone. So we would do okay by buying long here. Took a little bit of heat again, but no big deal. We didn't get stopped out. So now we're in the trade. It's moving in our favor. The next thing we need to know is, where are we getting out? Well, if we're at all-time highs, we don't have any target, do we? We don't know exactly where to exit. So instead, I go back to my trend time frame, which is 60-minute. Okay. And we use the fib extension. So we had our long entry on that candle, which we're in. And with the extensions, remember, we need to have our completed impulse. But now I don't start at the beginning of the candle. I start at the bottom of the move. And I go to the extreme. And there it is. So now I've got point A, point B, and point C identified. C being where we entered for the long. And I use the Fibonacci extension, and you can see I now have extension levels. I mentioned, I'll zoom in a little more so you can see this. Oops, Control X, that's what it is. Yeah, I have these Fibonacci levels I typically use. 61.8 is very common, 100% is very common, 127.2, and also 161.8. However, I have found in practice that there are a couple other levels that can be useful. 113% and 138.2%. So now that we've gone long at the Fibonacci zone and a demand zone, we are going to target 13,250 for our first target. If we see the momentum is great and we want to hold on, we try to ride that up with a trailing stop until we hit 13,362. If it breaks that, we go to 13.4. If it breaks that, we just keep going until the market tells us to get out. So you can use some sort of a trailing stop, or if you have multiple contracts, you can take pieces of it along the way at each one of these levels. Or if you want to, you just simply exit at one of the levels if it looks like it's going to turn. So zooming back out, let's see what happened here. Prices moved up, and we're stalling just shy of 61.8%. Not at it, just shy of it. The momentum still looks pretty good. I use RSI for momentum. I also teach that in detail. And I have a couple of videos in YouTube about that as well. But the main bulk of that, if you're wanting to learn more about how I use the RSI to help confirm and manage trades, join me in the E-mini think tank. That's where it is. So anyway, we're exceeding that. So now our next target is at 13,362, as I mentioned. There we are. Look at the stalling going on there. Right on time, red candles coming in, stalling right at the Fibonacci extension. Isn't that crazy? So maybe we take some profits. If we do keep going, great. If not, we got our profits. And look at that, we stalled out. So now what do? Start over. So we've had an impulse. Well, we got to measure our retracement. I would say that the uninterrupted portion is not from right here. Remember, this was our impulse that went up, but we had a couple of interruptions in the way. So if I want to be more accurate, yes, I could start from here, from our correction point. and we'll compare the two. But I believe to be a little more accurate, what I'm probably going to want to do is go from, actually, let's do this real quick. So I can compare the two. I'll use a different color. And I'm going to go from here, which is the uninterrupted move. Apply defaults. Oops, up here. There we go. So now I've got the two different ones I'm using. Let's zoom in a little more so we see it. Which one worked better? I said actually trading is simple. It's not easy. Yeah, it's simple. So there's our impulse beginning again. So which one worked? We had this. Let me move that out of the way a moment. So that's the blue lines right here. Just get that out of the way. And you can see with the blue lines, that was going from all the way down the beginning. We actually only had 23.6% retracement. So let me delete that one for now. And just that last impulse up, this was using the last impulse, that actually died off of the 61.8% retracement. So both of them actually worked. Once again, the tiebreaker would be, when we go to a lower time frame, were we hitting an area of demand to be able to buy here? Actually, this one worked really well with the retracement going exactly to 78.6%. Dead on. So I don't think the other one worked as well, which was using the entire move. Let me check that again. Yeah, trading is simple, but not easy. Because there's simple steps and simple rules to follow, but it's not easy because there's so many of them to remember. Anyway, if you're going from the bottom here, you can see that we completely missed. Oh, that wasn't the retracement value that was here. And that one, yeah, it's still somewhat in the area, 23.6. But remember what I said, the best one to use is the uninterrupted impulses. And right here, excuse me, that uninterrupted impulse, from here on up, lots of green, gave us the exact retracement of 78.6%. So if that also correlates with the demand zone, our 15-minute time frame, that would have been our buy opportunity. This is TradingView that I'm using. Yeah, again, I got a question about TradingView. This is TradingView. And if you're interested in using TradingView, I don't have it there now. I gave out a link a little while ago for $30 off. See if we can find it again. There it is. I'm not saying you should get this. I'm not saying you have to get this. If you've got the platform that you like, and it's got Fibonacci's are on pretty much every platform. It's very common. So anyway, and delete this out of the way. And unfortunately, excuse me, looks like this came just above the zone. As you can see, we were looking at drop. Oh, maybe not. Well, yeah, it just missed the zone. That's unfortunate because that was beautiful. But you can see I have drop, base, rally right there. That was my zone. And we only went to the Fibonacci retracement value. So that would have been a judgment call to buy above the zone. Even if I use wick to wick, still just shy of it, unfortunately. So the fibs worked and pushed us up. So now the fibs worked. If you were in, or even if you weren't in and you want to know where the next impulse was going to end, let's go back here. Excuse me. Move all drawings. Now we're moving back up again, and I need to know where are we going to go. So I go back to using the Fibonacci extensions yet again. And I click on that tool. I go to the extremes though. Remember earlier on the impulse, doesn't look like an impulse here. Let's make it so it does. Okay. That was my preceding impulse back here, but I was using this open of the green candle as the start of my Fibonacci retracement study. Sorry about that, I'm having allergy problems. But for the extensions, I'm going to use the extreme low to the extreme high to the extreme low. And notice our first impulse out did stall at 61.8%. But as we reached out to new highs, we overshot all these. And unfortunately, this one failed us. We didn't hit a Fibonacci extension. We ended up blowing through all of them, unless maybe this was our extension, correction, new extension. Who knows? Let's take a look. They quit each day at a fib. It'd be nice if they did, but the markets don't always do that. So that was our impulse up, correction down. And wouldn't you know, that is a 30, oh, this one did. This is a 38.2% retracement. Look at that. So yes, it was at the 61.8%. We ended our impulse. This was a new impulse that corrected all the way to 38.2%. And I don't know if this Fibonacci extension is going to work for anything, but we have our impulse up to the high to our corrective point. And nope, didn't really work at all. So again, now we were in no man's land. But every time we reach out to new highs, this is something we could use to identify where we're going to stop. And we can go out to, like I said, currencies. This works out really well for as well. Do Aussie yen. And I happen to be on 1 hour. I can put this on any time frame. It doesn't matter, but this looks like it might work pretty well for us. We had a nice impulse up right here. Impulsing up. There's your lower high and lower low. Time to use a correction. So if I was trading on a 15-minute chart, I'd be using the hourly here for my corrections and impulses to measure them out. So we started making the lower high and lower low as it started pulling back. You can see we're correcting down towards 23.6. And that's it. Now we're making a new impulse. So for the impulse up, it's the extensions go from the absolute low to absolute high to our pullback. And we've got those fib values where we should be going to. And this one failed us because we're in a correction now. So they're not always going to work, right? If it was 100%, it'd be awesome. But then again, nobody would lose any money. So it doesn't work 100% of the time. And now we had a retracement back. Look at that, 38.2%. Started impulse up again. We actually did make a slightly new high. So if we were here, seeing that retracement, now we're looking at where we can buy. We could buy the 38.2% retracement if this happens to be a 15-minute buy zone on the demand side, right? Because I'm going to line this up with the lower time frame entry points. Once we buy, I need to know where this is going to go. I use the Fibonacci extensions, low to high to the retracement point. In this case, it failed me because we never got the 61.8%. Curious if we got to 50. Not that this one I really use, but nope. 38.2. Look at that. It did make it to a fib ratio. But I never used that one. Maybe I should, I guess. I don't know. But we had a failure to make some new highs. We barely made a new high here. Did, but very barely. And then started pulling back. Well, if we're pulling back again, it's time for another retracement. This is going to be tricky because this really is my impulse up, and we're already 100% past that. So now what I would do is instead of trying to use a retracement, I would look at this from the standpoint of saying, okay, we have an impulse down from high to low, corrected back, and now we're making a new impulse down. Does that make sense? Because we did a little M formation here. We made a fresh low. We're no longer impulsing up. We're actually impulsing down and maybe in a bit of a downtrend here. Okay. Pascal, hey. Sorry, my dog's barking out something. So we continue to move down, and it was in the neighborhood of 161.8, but didn't quite work exactly. And now we're impulsing back up. So if we're impulsing back up, I can use last impulse up. I didn't put that in the right spot. Correction down. There it is. That was our last major impulse up. Correction back down. Projection back up. And it's leaving us hanging there. That's where we are now. We're just dying off. So if we go out to, let's see, DIA, the diamonds, we have the Dow. we'll go to bigger picture. We're reaching up to all-time highs, aren't we? So this is the problem that we have. We don't know where we're going to go. So what we have to do is measure from our most recent impulse up and try to make it simple. You know, right here, it looks like there's a low, there's a high, there's our retracement. Done. But we're missing something here. We have to add in the gaps, right? That's the one piece that's missing here. So we have gaps that we got to add in. So I brought up my notepad here and we'll write those down for the gaps just to see where this should retrace. What would happen there? Oh, Cortana. It was weird. Okay, you guys still with me, I hope? Looks like it. All right. I'm in overtime anyway, it's fine. I'm supposed to go an hour, but I get to end when I want, I guess. Or if Amelia pulls the plug. Anyway, so we have impulse correction. Now we're impulsing again. This will work better on the futures because we don't actually have all the gaps. But what we can do is on this, we can look to see the unfilled portion of the gap. So I have the close of 326.19. Okay, Amelia says I'm fine. She's not going to pull the plug on me. She likes this stuff too. So anyway, the low here is 326.68. So I wrote down those values, and that's the first gap that I have to add. So the first gap I have to add in is 326.68 minus 319. I'm sorry, it's 326.19. That's 49 cents. So I got a 49-cent gap I got to add. Then we have another gap here. Close on price here. I did say it was simple. I didn't say it was easy. 331.45. The unfilled portion of the gap is, let's see, low, 333.43. Yep. 333.43. So now that one is $1.98 unfilled gap. That's why it's easier with the futures. You don't have all this, like I said. Here we have another gap. So we have a close at 335.13. And the unfilled portion of that gap is going to be 337.86. Low. So we have another gap. $2.73. Does it make a big difference between all these gaps? And let's see, we have another gap. We still haven't corrected, but we have two more unfilled gaps here. So we got another close, 337.53. And open and low here is 338.83. So $1.30. And our last gap, finally, we have a close at 340.44. And the unfilled portion, we're at the low so far today of 341. Which means we basically have 54 cents or 56 cents, I believe. Right? As we'll do it. 341 minus 340.44, 56 cents. Okay, so what happened was, as I mentioned, we had 5 gaps that we have to add that price in. Oops, 0.56 plus 1.3 plus 2.73 plus 1.98 plus 0.49 gives us a grand total of 706 we have to add into our fib levels. So total is 706. Just writing that down. And if we add that to 337.42, it leaves us with 344.48. And that is our first projection, not this. And the reason why is we had to add in the gaps. So it's suggesting there's still room to go. The 100% extension is not 347.80. No, 347.80. We need to add 7.06 because of all the gaps, 354.86. That's the actual 100%. And then 113, everything else, we got to add in all those extra numbers. Okay. Yeah, you could move point B up by that amount, actually. That'd probably be the easiest, wouldn't it? So that'd probably be the easiest thing to do right here. Is add up. No, actually, you don't want to move point B. You move point C by 706. So the point C is currently 320.62, right? So we do 706. And that's right. See, you got to move the point C by that much, and I'll do it. So that's easier. Thank you, Will, for bringing that up. Yeah, you can't move point A or B because you got to measure that by the numbers. But point C is what you're projecting from. So you move it up by the amount of the gap, and that'll be your accurate numbers there, right there. Now let's compare this, if we will, to the futures, if we want. YM, M, 2021. And you can see we don't have the gaps here, right? So if we're using the fib extensions, there they are. And actually, it's a little more accurate to begin with. Oh, there's a gap here. But you notice right there, we're stalling out in the area. And if I added in the gaps, it'd be right on top of this. And then we have other Fibonacci extensions that might correlate with the ones from the diamonds. So that's how we can look for all-time highs and where prices might turn from those all-time highs. For instance, if we go back in time here, you had low, high, correction. And you can see, look where we stalled out. We had a little pause at 61.8% and then continued the impulse. We never made the lower highs or lower lows. And look where we ended up stalling out for another correction at 100%. So we corrected down. Great. We can use the Fibonacci extensions after the retracements. There's the extension. If I was using the retracement on this, I'd be going from the beginning of the move up to the high, and look where it went, right to 50%. Exactly. So it told us where we're pulling back to and where to join in the trend. You had a little pause here. Unfortunately, it might have been stopped out. Actually, it wouldn't have been. If you put your stop below the level, just a little bit, it would have been okay if you bought at the 38.2, but you could have added more at the 50%, saw that it worked out. And now as we're impulsing up, we should stall out when we hit one of the fib extensions. And there it is. We stalled out at 61.8%, didn't we? Now, they probably would have stalled out right at the peak if we add in the gaps as well. I can actually, let's check that real quick. Let's see the close here, 33.037. Which level to pull back to? You got to see which one correlates with lower time frame zones. Okay, so anyway, the unfilled portion here, we're going to wrap this up here, 33.157. It just works better wick to wick for the extensions, but not the retracements. That's why. I don't know why exactly, but that's what I found that works the best. So an extra 120 I got to add to this. So whatever my low is here. I'll do the calculation. $32,071. Here we go. And you can see that's where it stalled. So it works. Anyway, that's pretty much all I got for you guys. As far as the extensions and corrections using the Fibonacci, like I said, the extensions are great for all-time highs or all-time lows because we don't have any zones below us. If you want to learn more about all this, please, please, please join me in the E-mini think tank. Amelia posts that link once again. If you're interested, you can do a 2-week free trial if you join in the quarterly subscription. If you do monthly, you just got to pay the monthly. But there's no long-term commitments to it. If you decide you don't like it, that's fine. You just cancel at any time for whatever reason. The Coach's Corner video should be posted on the YouTube page. So if you want to review this, let me see, whoops, I have the browser open here. If you go out to YouTube and you search for Wealth Builders HQ, there it is. Wealth Builders HQ, you can go ahead and subscribe to us as well. And you'll see there is the Coach's Corner again with Ryan from last week. And you can go into history once you subscribe, or even just click on it. There's also Wealth Builders HQ TV on our website. So that's pretty cool. And yeah, lots of places there. Oh, thank you. No problem, Marlon. So yeah, I got a couple places I got to go today and take care of things. But you can see where you got Rao's Power Hour. You got, really cool videos on this, lots of other stuff. So anyway, if you got any more questions, let me know. Just contact us, support@wealthbuildershq.com. And if not, everyone have a great day, and great weekend too. So enjoy it. Everyone take care, trade safe, trade well.